So, good morning. Today, the 26th of October, make a short summary of the markets and course a short analysis of current move and possible levels will to come. So, we begin first with the current move. As we have seen, the Asia and the European session is still very bearish. The fundamentals are the same, the level is the same. As I said yesterday and the days before, after we, so the gap at around 14,500 was the last safe haven for the bulls, and also the possible, let's say, last resort for the bulls, which has been broken very heavily by the new homes data, 70,000. The estimation was around 60,000. That's a very, very high number. On the other So let's check. Yeah, I have a short right now and see. Yeah, it's looking good. Exactly what expected. Already on our live streaming of today, we've been talking to, and we see here that this is the new 6 hours bar. And if we go back, we see this is the from here to here. Yeah, this is the last 6 hours. Check. 5 hours. I'm sorry, 5 hours, not 6 hours. So, and the last bar has been an inside bar, but the trend was down. So, on low area, this is our euro dollar short, dollar is up, the index is down, crude gaining back, and that's all right. And we have the Israel tension. The sanctions of Iran have been announced now, are becoming, the sanctions on Iran are becoming tighter, and because of Israel-Hamas war. So the market is doing now lower lows on daily and other time frames, and also on 6 minutes, 6 hours and 5 hourly. We are here on 5-second chart. So we need to wait first. So my indicator, this is my delta indicator, where here are the bulls, for example, here are the bears, and we see the amount of bearish power. The bears press down the bottom, and I will check now for some divergences. Be here, the first level is 14,544, and if breaking that, only if breaking that, the next resistance will be around here, the beginning of this green area, right? So at around 14,555, 551, and to climb to higher levels at 14,567, it would be very difficult right now with this move, because today is trend day, right? But let's say the bulls get a trigger, whatever, catalyst, whatever, and the market moves higher. Then the next obstacle begins for the bulls from 14,563 to 14,590. So this is for me the first potential location to sell again, and then we will drop again. If the market doesn't show any signs of divergences, then the next possible location is 14,659. So where we can go back, right? And especially here in this area, we should expect some sideways. I think it will happen shortly before Powell is speaking the market. So therefore, today, for example, uh, buying the bottom can only work if we see any signs of divergence at the bottom first, and the market can a minimum close, or the market can close the last bar of this 6 hour chop on 6 hourly bar above this area, somewhere around 14,573, right? So of course it is possible, as I said, that we rise higher to 14,615 again, of course, and I wish it to. I want it, the market coming higher, because then I will try to sell to catch very optimal selling opportunities to sell more. All right, this is so short summary. Hope you're doing well, and just be patient, monitor the market, to buy the US dollar. Also, gold is rising. Typically, gold and the US dollar have a negative correlation, but in this case, the people are facing the very dangerous banking crisis is beginning in Japan. I told in one of my last streamings, you may watch them, also my YouTube channel, go to subscribe to the channel and also watch the updates there, please. That the Japanese Bank of Japan monetary policy is really dangerous to cause the next bank crisis in Japan that will spread in China and Asia before the fire spreads in Europe and latestly in the United States, but the market are very sensitive. So now the current bullish move here from 14,172, we see now here to found the first bottom. If we go back, we see that latestly yesterday evening here, we had a very big move down again shortly after the close, after the metadata has been, Microsoft data has been released. Microsoft made 3% plus before they announced that the revenue for 2024 will be very uncertain, so the market dropped down very heavily. Here at around 14,173, the market found a temporarily bottom. It's not a real bottom because the low is relatively very low. So in case we have such disinformation, never buy this bottom. The bottom is extremely weak and it is no real bottom, nor on the intermediate, nor on the lower time frames. So the current bullish move is caused just because of the gaps, right? You see, so we had here a gap, the market moved up, filled this gap. Now the market is saying before the US session is opening, they're gonna fill as quickly as possible the gaps. The next gaps possible is at around 14,252. The next one might be at around 14,265, 14,285, and latestly 14,301. So it doesn't mean now that necessarily now the market is running that way, but currently we see here a near-term bullish move. And do not forget, it is not a bullish trend. The trend is definitely, absolutely, 100% bearish. We are in a very strong bearish trend. I have been writing here, you can see if you go on the mines, I have published that. So for some people who have the common question, so we begin here. Trend is strong bearish. We will only sell. If we take profit, that's a close buy, but it is not a new buy. Meaning, let's say, for example, somewhere here we have sold the market or maybe higher, and now we intend to take the profit somewhere here. We take the profit. But as we know, the market now currently will rise higher to fill the gap. We don't and never fall into the trap to buy and think, all right, I'm making money if the money comes down. I'm making money if the money is going up. Of course, you can do that. You are a free person, and I hope, and I know you are also a smart trader. I never want to do that. Why? The problem with gap filling is a so-called term in trading. We call that fishing. I come later to that term. So don't get greedy to start buying. It will cost you a lot of money, and you would have followed my strategies recommended during the last days and weeks. Now you would have made a lot of money, and we see that's true. Bullish, it's going to fill the gap before it starts to fall deeper. And we see now here, we see a lot of bearish delta. The market rose here somewhere quickly, filled the gap. Some buyers are taking profit here. Some sellers are taking profit here and start to sell here again. All right. What is the logic behind the gap? Well, as the market falls, for example, there are a lot of traders, right? You have no time, or you have been missing, let's say, well, you started your trading here, but and you saw that the market already has made this move, right? You said, oh, damn, I would like to sell the market here. Now you put an order here, and you go to the gym, or you go, let's say, breakfast or whatever, right? Now the market is coming back. Your sell order starts to get active. All right. And the buyers do the same. They buy the market, they go sleeping because this market 24 hours business. And they say, okay, if the market is coming here, then order, take profit, close the account. So therefore, here are a lot of millions of different orders, right? Also here on these levels, for example, at 14,265 and so on, right? So there are sellers, for example, they have been selling the market at 15,000. Say, okay, please then take profit. I cannot monitor all the time the market. The market fell sharp. The orders had not been active. So if the market is going back to fish this, to fill this gap, then also those orders get liquidated if there are, for example, new sales, meaning the bears want to sell much more here because they expect that the market will come down to the levels where it will go later. And therefore, latestly here at around 14,301, if the market is coming back here, and I say loudly, if there is nothing absolute, if it's not doing filling gap today, it may is doing it tomorrow, if not possibly next week or during the next week, right? So that's the problem with trading. We never know exactly the time, but we know somewhere the time horizon it can happen, right? For example, to fill the gap of 14,500, we have been waiting more than 6 weeks for that, right? So the market will come up, fill the gaps, and then it starts structuring. Like here, we see we have a consolidation, signs of divergence, and the market starts slowly to fall back again. All right. Now, therefore, I have here a Troy, right? If you have seen the movie Detroit with Brad Pitt, this is that horse. And this horse have been a lot of enemy soldiers. So the market lets you thinking now it's over, the market will go up higher to 14,800, 15,000, 16,000, 1 million, whatever. But as you start to buy, the smart money that is selling the market, and I told you who is the smart money. For example, BlackRock, right? So around 45 days ago, output over $15 billion and started slowly. So good afternoon. Today, now here is the 23rd of October, Monday. This is the weekly review and weekly analysis for the week 23rd to 26th of October week. Very important news. Bloomberg announced that BlackRock clients pull $13 billion from long-term funds. And as you can see now in the headlines, this market first outlaws since once of the pandemic on the market to sell the stock market, to sell Bitcoin, to buy the cash, right? And you see, it's not happening very fast. They are doing it very slowly. And then somewhere the market noticed all those liquidations and started to react. All right. So this process is called phishing. The smart money lets you think that Nasdaq and Q is bullish, and then they attack you and wipe you and your account because small fish is out of the game. So play smart. Always do that. So follow me, watch my streamings on TradingView. Also now all the trading strategies also on higher time frames are still really active. So what will happen next? Because we have broken the gap, the market is now currently in the zone as I announced at around 14,200. And we see here the low, the stops at around 14,100 zone has been hit down. So that's also the next reaction that the market is generating more buying volume temporarily, a near-term buying volume. The market is going higher before it drops deeper. So the next target will be at around 14,150. If we break that, the next target is at 14,120, 14,000 fix, 13,990. The next target will be at around 13,850. Let's say the zone between 13,500 to 14,000. Why? Watch my last streamings. I have mentioned them on daily chart very clearly because below this gap of 14,500, the bullish volume is very, very thin and low. And the next possible consolidation phase where Perhaps the bulls will try to defend their bullish positions they have been building up since the January the 3rd, the beginning of this year, and it was somewhere at around 10,490. They try to defend that position. If we lose that zone, the market will go down between 12,500 and 13,000. And if we lose that zone, the market won't go to 12,000. We will go to 10,800 and 11,200. There is a very big bearish gap, and once breaking that, the Nasdaq will go down below 10,000. All right, that's of course, let's say, some way sounds like music for the bears, and it takes some time. It necessarily does not need to happen if the global and macroeconomy news and triggers and catalysts change. For example, let's say the Chinese start to sell massively US bonds, but they cannot because they cannot afford it. So otherwise they get in trouble very much. And currently the data for China's economy is really, really disappointing and bad. But let's say it happens. That will generate the sell-off US dollar, the dollar goes down and the market will immediately react and we will go higher. Now let's say at what point we can say that the market for the Nasdaq is becoming bullish again? Well, the answer is easy. The first step is if the market runs above 14,800, because there we had the last very strong bullish support and also an accumulation. After breaking that level above 15,200, the target will be at around 15,500. And once reaching that, then the market tries to break up a gap, and we have only one bullish gap above 1,815. That's the low of the gap, and running higher to 16,005. Right, 16,005 is that has been caused since 2021. Once breaking that, then the Nasdaq can go its primary long-term, very long-term bullish trend that was above the first target would be then at around 17,000, right? But temporary strong bearish mode because all the supports have been broken very, very easily. And you see also in the meantime that the market is reacting here. So if you see that period of time, the market ran nearly very fast, right? The bullish move was very fast, and now they are struggling here, okay? So, and you need to check up here for some divergences. If you intend to sell, right, to sell here, then put a very tight stop at around 14,265 because this is the gap, and above this gap we have also these three gaps, right? So what I am doing, well, I have been selling yesterday also, and happily my position is good, in very good mood, laughing, and I'm waiting until we reach that zone again, right? This patience is very, very important in trading, and you will see because it's working, right? So we don't fall into the trap. We don't hunt the prices. We let the market comes to us, right? My setup is standing here, but I'm not moving my setup to here or to here. I wait. I just wait if it's not happening today or maybe tomorrow or even in 2 weeks, but it will happen again. So somewhere, and I wait the next selling position for me in minimum is here. And if I see the market is running higher in divergence, then I wait a little bit longer because then I get much more better selling prices. We do that so long as the trend is bearish. All right. We do selling only as long as the trend is bearish. If the trend is changing, and trends always change, then we stop buying, we take the profits of our short positions, we close them out, and we start to buy the market. All right. I wish you're having a good trading day. Anyway, today very important unemployment claim and GDP data are coming out, and that's making the market very, very nervous as they expecting very good gross domestic products numbers, GDP number of the United States. Typically, it's good for the stocks, but not with the current conditions of the market. As the market, we are in a very high inflationary times. So typically any good positive news, what is normally good for the market, is interpreted as negative news, right? For example, high numbers, and in this case, the US dollar is benefiting all of them and pushing the market more down. All right. So trade smart, trade wisely, trade with patience, put stops. If your stops get hit, don't mind about it. Wait until the next situation, and the next situation will come. The next strategy is staying out. As I say always, this market you can trade every day in the week. So tomorrow, so next week, so next month, so next year. Even you can stay out 1 year and then start trading after that again. You will always have a lot of millions of opportunities. I promise you. So don't get trapped in FOMO, fear of missing. And now I wish you all the best. God bless.